Benefits of investing. One of the most important things that you can do as an investor is to get an early start on investing. The old saying, "the early bird gets the worm," certainly applies to investing in a big way. Investing is defined as making an investment in order to earn a profit, and earning that profit will be much easier to do if you get an early start. Investing at a young age isn't always easy, but the benefits are numerous and can't be overlooked. Time is on your side. This is the most straightforward of all the benefits, but yet it may be the most important of them all. Quite frankly, if you begin investing at a young age, history tells us that you will end up with far more than those who invest later in life. Having time on your side means having a longer time period of being able to save money to invest and a longer time period of being able to find investments that can increase in value quite nicely. Compounding returns. Compounding returns are extremely powerful over the long run, and the earlier you get started, the greater your chance is to take advantage of this. Put more simply, this is the power of the time value of money. Regular investments in an investment portfolio or a retirement account can lead to huge compounding benefits. Improves spending habits. This benefit is generally overlooked by many, but investing early on definitely helps develop positive spending habits. Those who invest early on are much less likely to have issues with overstepping their boundaries in spending over the long run. Investing teaches important lessons, and the earlier you are able to learn those lessons, the more you can benefit. Ahead of the personal finances game. If you're a young investor, you are putting yourself ahead in the world of personal finance as a whole. By growing your investments over time, you will be able to afford things that others can't. Your personal finances are bound to get tight at times throughout your life, and investing at a young age can help in those tight times. Quality of life. The basic quality of life is a huge benefit of being an early investor. By investing early in things such as Roth IRAs and retirement accounts, you should be able to avoid having to make frantic moves near or during retirement. Quality of life during your retirement years will be much better because there will be less stresses and more of a nest egg to work with. Advantages of financial investment. Advanced portfolio management. One need to pay an administration expense as a major aspect of the expense proportion, which is utilized to employ an expert portfolio supervisor who guides you in purchasing and offering stocks, bonds, and so forth. This is a generally little cost to pay for help in the administration of an investment portfolio. Dividend reinvestment. As profits and other premium wage is pronounced for the reserve, it can be utilized to purchase extra offers in the common store, in this manner helping your investment develop risk reduction, safety. A decreased portfolio hazard is accomplished through the utilization of diversification, as most shared assets will put resources into somewhere in the range of 50 to 200 distinct securities relying upon their core interest. A few record stock common finances claim at least 1,000 individual stock positions, convenience and fair pricing. Shared assets are normal and simple to purchase. They ordinarily have less or low least investments, some around $2,500, and they are exchanged just once every day at the closing net resource value, NAV. This dispenses with value change for the duration of the day and different arbitrage openings that informal investors hone. Odds of good returns in short time. Indeed, Even in the past, individuals have increased great profits for their securities exchange investments, and they generally have a decent opportunity to acquire enormous benefits when one chooses to put resources into securities exchange. In this way, when you put resources into securities exchange India, in spite of the fact that you put yourself at a ton of dangers, you are likewise in a position to acquire great returns in a brief time frame. Minority ownership. All things considered, it sounds like a misrepresentation, yet when one put her cash in a rumored organization's stocks, one moves toward becoming turned into a section proprietor of the organization, regardless of however little or offer they have. One can enhance remaining in the market by placing cash in various organizations. In addition, you can exit at whatever point you need to. Disadvantages of financial investment. High expense ratios and sales charges. If you are not paying attention to mutual fund expense ratios and sales charges, they can get out of hand. Be very careful when investing in funds with expense ratios higher than 1.20%, as they will be considered on the higher cost end. Be wary of 12b1 advertising fees and sales charges in general. There are several good fund companies out there that have no sales charges. Fees reduce overall investment returns. Management abuses. Turnover and window dressing may happen if your manager is abusing his or her authority. This includes unnecessary trading, excessive replacement, and selling the losers prior to quarter end to fix the books. Tax inefficiency. Like it or not, investors do not have any choice when it comes to capital gain payouts in mutual funds. Due to the turnover, redemptions, gains and losses in security holdings throughout the year, investors typically receive distributions from the fund that are an uncontrollable tax event. Poor trade execution. If you place your mutual fund trade anytime before the cutoff time for same-day NAV, you'll get the same closing price NAV is for buy or sell on the mutual fund. For investors searching for faster execution times, maybe because of short investment horizons, day trading, or timing the market, mutual funds provide a weak execution strategy. Volatile investments. Investment in BSE is subjected to many risks since the market is volatile. The shares of a company fluctuate so many times in just a single day. These price fluctuations are unpredictable most of the times, and the investors sometimes have to face severe loss due to such uncertainty. Brokerage commissions kill profit margin. Every time an investor purchases or sells his shares, he has to pay some amount as a brokerage commission to the broker, which kills the profit margin. Time-consuming investment in NSE is not as easy as investing in a lottery, as you have to complete many formalities in the process and hence is time-consuming.
Thank you. Prepared by Froilan B. Dent.